Welcome to another Security Token Show interview. Today we have Tim Bass from Redbelly Network. Tim, how are you today?
I'm doing very well, Jason. Good to be here.
Fantastic. Great to have you. You guys have exciting announcements all over the place going on with Redbelly. And before we jump into it, tell us a little bit about what you guys are exactly, and we can jump into the news.
Yeah, 100%. So Redbelly at its core is a really fast, secure layer one blockchain. There's quite a few differences between us and everyone else in the real world asset space. And it's not just the technology. What we've essentially done is taken a formally verified consensus, which was invented in the University of Sydney and CSIRO, which is the Australian government science agency, and taking this extremely secure and deterministic consensus and specifically focused it on real world assets. So I think that this has given us some unique properties, which we'll obviously unpack during today's call. But at its core, Redbelly is very focused on moving Web 2 assets and registries onto Web 3 databases. And this allows us to have the native assets issued on Redbelly network, not just a copy or derivative asset that people just tokenize and then try and trade in a Web 3 index. So
got it. So we're talking about like a natively issued on-chain security rather than just the mirror of an existing asset, what you're saying.
Exactly. And so if you look at our website, you can see that we're very focused on on-chain structured products. So our view is once you have the native asset on your network and it's compliant and asset issuers can be confident of who they're doing business with, you can compose these assets into brand new structured products, which is quite different than just replicating a T-bill on-chain.
Got it. Awesome. Well, with that context in mind, everyone, Redbelly has recently gone mainnet, and you guys have over $70 billion worth of RWAs in your pipeline to bring on chain, which is really exciting. And I want to dive into them, but tell us a little bit about your testnet experience and where you're at now with mainnet and next steps there before we jump into the meat and potatoes.
Yeah, look, because our project was born out of academia, it's been very focused on the sort of speed and the security guarantees. So we really wanted to make sure that we had a very unique sort of value proposition and go to market for users. So we built the virtual machine on top of this consensus. So obviously we're backwards compatible with every other DApp most of the DApps in the space. And then we've gone ahead and built what we call verifiable credentials. So this is basically a technology that allows people to verify themselves off-chain and then create a zero knowledge proof for their eligibility criteria. So if they're over 18 or if they're in the US, they've got a credential for each of those things and allows them to do business really seamlessly without having to re-KYC over and over again on our network. And so we really wanted to get our community a sense of how this might work with our testnet. So on our testnet, we launched that on the 31st of May this year, and we actually had the first version of this identity system enabled by default. So that means that everyone on our testnet is a real person. We're essentially completely resistant to cyberling, because if you're on a sanction list or some sort of a KYC issue, then you can only join the network if you've passed that and you're verified. But importantly, none of the PII is ever controllable by Redbelly, and it's not stored on chain, it's client side. So we built a testnet where we had a bunch of really interesting applications where people could buy tokenized real estate, and they could use that as collateral for lending and borrowing. We had tokenized insurance policies, be able to buy Tesla stock and use that as collateral. So really try to show our user base what mainnet could be, and that's quite different to what most people do with testnets, which is usually just about sort of pumping up those numbers. So yeah, it was very successful. We ended up with 162,000 KYC users on our network, which is, I think, incredible. And a lot of those users are Web 2 TradFi customers of our asset issuers. So these are net new users to crypto and give, I think, our space the shot in the arm of a bunch of sort of sophisticated, high net worth style users that wouldn't otherwise be, nowhere to start on another sort of Web3 blockchain. So that ran for about 6 months, and then we launched our mainnet, the sort of internal version of it for our infrastructure set up and stuff like that on the 21st of October. And then publicly, we launched our mainnet about a week ago. So it's been a really great journey. All of those users across Testnet migrate to mainnet. And so we wanted to have a sort of seamless experience on that side. And yeah, it's been wildly successful. I think we've done one of the more novel and use case specific testnets in existence. And I'm very proud of it.
Really exciting. Yeah, we saw that image earlier as you were explaining, right? There was a nice spike in wallets being created. You guys had, quite a few transactions happen on this testnet, and glad to see that, Mainnet is alive and well now. I do want to dive into the RWA part of it, right? That's kind of what our viewers, love to hear about is, real world assets being tokenized. And so, you mentioned real estate. I saw other companies like Bluebird, like, Advantage Blockchain as well. And other assets. And tell us a little bit about what kinds of assets are represented in this 70 billion, and if you can, maybe any breakdown of what that is.
100%. So our go-to-market is primarily focused on the asset issuer. So this is the licensed issuer, if you like, that's already doing business in TradFi or Web2. And so generally, challenger brands are the ones that are like tier 2 in their industry. They still have millions and billions of dollars of compliant assets. They're still very profitable businesses. But one of the problems that a challenger brand has is their cost of capital is usually higher than the market leader or incumbent, just through size and scale. And so in order for them to outcompete the market incumbent, it's very difficult. And so they're usually more pro-innovation. So we've been very deliberate about which issuers, the large majority of them anyway, that we've targeted to sort of speak to them about how we can use tokenization and the Redbelly network to get better distribution, to get lower cost of capital, and ultimately create better products. And so as part of this, what we've really helped them do is work with partners who can help realize that from the tech perspective. Because a lot of these, think of them as sort of financial services, sort of fund operators or, sophisticated, broker-dealer style individuals. And so, but regardless, all of their assets currently live in either spreadsheets, databases, PDFs, emails. So the first thing we've done is we really focused on, and look, we can talk about sort of one of our other partners, Liquidize, which is an Australian cap table management and sort of secondary trading platform for private equities. They've got $500 million of private equities. And these are a bunch of companies that sit in their platform that investors the cap table and they can do their corporate governance with the regulator. And so what their issue is there's very little liquidity in these secondary markets, right? So you've got to kind of know who the company is. You have to be introduced to them. It's wholesale only. So what they've gone and done is they've essentially got a registry full of all of the company information that's also being sent to the regulator, which is called ASIC in our country. This is essentially like the SEC. And it turns out that their registry is the most up-to-date version of who owns what when than even the regulator, right? So what they've done is essentially tokenize this registry directly on the Redbelly network. So the assets that sit inside of it are the actual shares, and they're the native shares at that. And so from this perspective, we're really cutting a bunch of back-end costs that no longer needs to run in the Web2 world. So it's got to be significantly lower cost. Otherwise, it's not, walled gardens would be the solution, right? You need composability on top of that, right? And so they've definitely been very interested in, not only their 15,000 or so wholesale investors that currently already use the platform in getting secondary trading and liquidity, but also if you're a founder of a company or you're an employee on some long stock options, you can use those tokenized assets as collateral to unlock some value for yourself in other markets. And so this is really the composability and structured product lens that we want to bring on the Redbelly network. And if you pair that natively with verifiable credentials, you can do that like instantly without reusing KYC over and over again. So there's a lot of kind of interesting ideas there, all stacked on top of each other. But what you'll find, Bluebird is a service provider that's helped one of our partners achieve that mission from a technology standpoint. Advantage is, fund manager, and they're very interested in distribution and getting their assets to the world. But ultimately, from our side, if you can get lower cost of capital, better distribution, you can introduce composability and make bespoke products that don't exist off-chain, then these challenger brands, by default, get an advantage at the product level and the cost level and the distribution level. And because our network has only KYC participants on it, but it's still open for anyone to join, it's not just a walled garden, we have clean liquidity as well. So you're not going to have, be wondering where that transaction went, because you'll have at least the peace of mind at the base level that people have checked. Sorry, did I jump in there, Jace?
Yeah, no, I think I might have lost audio for 2 seconds, but no, that's fantastic, and I appreciate the background there and context as to what the pipeline kind of consists of. Really cool examples. Advantage Blockchain is they're friends of the show and we know them well. So glad to see this partnership is on its way. You mentioned credentials being on chain, not repeating KYC. Quite curious, what kind of challenges do you expect to face on the KYC part as you are you expecting others to kind of use your KYC process, or do you find it that maybe there's going to be a challenge with others wanting to conduct their own KYC processes?
Yeah, there are a few things to consider. So firstly, verifiable credentials isn't a standard that everyone necessarily accepts yet. So, I mean, it's a non-blockchain standard. It's widely understood in sort of banking and TradFi, but we're using it with blockchain, so that's interesting. What it boils down to is the asset issuer needs to know who they're doing business with. So traditionally, they expect the investor to send a bunch of documents to prove something, like they're a sophisticated investor, they're over a certain age, etc. And so we want to have verifiable credentials prove that at runtime. But you still may need to cite the documents, or you may need still to do a wet signature, and these are dependent on jurisdiction and asset type and issuer rules. So we're really trying to at least put confidence in we at least know who we're doing business with, and if there's a level of credentialing or checking that needs to happen, that'll be done at the issuer side, right, on their DApp or whatever the case may be. But our goal absolutely is to take as much of that pain and duplication in each of these walled gardens, effectively, was what they are today in blockchain, out of that and factor the cost down. So we aren't the identity provider. We have, we're working with some sub, we're working with some other partners that essentially do this off-chain for the network. And so our sort of go-to-market on that side is to have a marketplace of IDPs and document verification providers that can build their business case as a better IDP for certain issuers and certain jurisdictions. So we would prefer an app store-like approach from that side. One key thing that we are working on is getting that sophisticated wholesale investor credential, so you can at least know that retail or wholesale before you even begin a process, right? And without knowing who it is. The other part is select and reveal. So if the asset issuer needs to see the actual digital documents that were used to earn that credential, you can still share them as the client or the user. So I think, it's still quite novel the way we're doing it, because it is at the network level, not further up the stack. But I think as we prove this over time, the amount of compliance and KYC that's already being done in their business will lower as they just ingest or sort of request the primitives from the network to prove it, so they can just get on with it.
Got it. Awesome. Well, no, I appreciate that, and that's interesting. At the end of the day, you have to know who your investors are. If you can, start segmenting out different, capabilities based on if they're for accredited or not. Obviously, that helps streamline the process as well. So we're almost at time here, Tim, but before I let you go, I do need to ask you, we're approaching 2025 here. What kind of predictions do you have, and where do you see the market going by the end of next year? Where are we going to be a year from today?
So I very strongly believe that the future of real-world assets is on-chain structured products. Like you said before, we have signed and now deployed over 70 billion worth of assets, and I probably should have gone into that a little bit further, but there's more information, of course. But they are on-chain. So what you'll see by the end of 2025 is an investor will be able to buy a product that is tokenized Bitcoin, with a tokenized carbon credit, with a tax offset, with government receivables, with a yield, all bundled into one product. And based on your credentialing, you'll be able to check if you can actually buy all of them. And if you can buy the whole structured product. So I think bespoke, choose your adventure, tokenized assets are where the space is going to go. It's not going to just be RWA and sort of ERC20 traditional digital assets. It's going to be the best of both. And so I'm very excited about that. So I think the sort of assets that you'll start seeing, particularly on us, will reflect that. And the bespoke nature of the issuer will be obvious, but the user gets to choose their own adventure on what sort of assets they buy. So I think more interesting assets, better liquidity, better distribution. And, we all love a bull market. I'm not going to wish that it ends ever. But when we get into the bear market, these products will be unbelievably attractive when people have historically just sat in cash through the bear market. And you're seeing this with treasuries in the large DAOs as well. Like, they want exposure to interesting products that generate yields, not just sitting in USD.
That all makes sense to me. Structured products. If we can actually get to a real structured product by end of next year, I would be very, very happy, because I think that's obviously, having everything tokenized, obviously everything in the product has to be tokenized for this to work. Then that unlocks a whole other slew world of assets that are investable, and obviously with different strategies and get a little bit more sophisticated. Awesome. Tim, I appreciate all this so much. Thank you for coming on the show. Best of luck. And obviously, we'll definitely be keeping an eye on you guys and all future issuances that come to Redbelly.
Awesome. Thank you so much, Jason. Take care.